In today's video, we will be learning about balloon mortgage. We will try to cover all the aspects like meaning, interest, EMI, repayment, and at last we will see an example. So I request you to watch the video till the end because with an example it will be more convenient for you to understand the whole concept. This video is also related to banking system module, so I recommend you to watch other videos in the same playlist so that you can enhance your knowledge related to banking. Now without further ado, let's start with the meaning of balloon mortgage. But before that, let me segregate this whole term into two words. So you can see here it is balloon and then mortgage. Talking about mortgage is nothing but any loan which is used by borrower to purchase any real estate property. So for example, if you are taking a home loan to purchase a house, so that would be a mortgage loan because till you make the last installment payment, your house will be treated as a mortgage to the bank. Now, why we are referring this whole concept as balloon, we will understand it with the meaning. A balloon mortgage is a loan in which borrower has to make low initial monthly payments and at the end of the loan term, entire remaining loan balance is due at once to be paid off in lump sum. So what happens in normal mortgage loan which you are taking, your whole loan will be structured with set EMIs to be paid within a time frame of about 20 to 30 years and it will be consisting of your principal as well as interest payment. So here, when we are talking about balloon loan, it is different from the conventional mortgage loan because here you are making lower initial monthly payments. Now, it may be that you will be paying only the interest in the starting and at the last installment period, you will be paying all the balance due, which is the balance due of the loan term in a lump sum amount. Or maybe you will be paying some portion of principal and interest during the starting term, but again at the end of your loan period, you will be making a lump sum payment which is nothing but a huge amount. So from here you can get an idea of the structure of balloon, which is initially it is smaller and as it goes up it gets bigger. So the same concept applies to balloon loan or balloon mortgage, whatever you consider it. It happens like initially you are making low payments, but at the end it will be a huge sum of amount to be paid by you, which is your loan balance due. Now initially you may be paying interest as I already mentioned or some portion of principal also. But because the loan term period will be quite shorter and thus the accumulated amount to be paid in lump sum at the end installment would be quite larger, and thus it is referred as balloon mortgage because it is somewhere structured as what we can symbolize as a balloon. So now let's see balloon payment. What does that mean? Still now we are reading about balloon loan and there is a term called balloon payment. So the final payment which is large is referred as balloon payment. So we are initially as a borrower making lower monthly payments and at the end together we will be making whatever loan balance is due, whatever loan amount is left in one go. So that would be the final payment, and that final payment, because it would be quite large, it would be referred as balloon payment. Next is repayment period. A balloon mortgage is paid off in shorter period ranging between 5 to 10 years rather than in 20 to 30 years like a conventional mortgage. Now, why does it happen that at the end you are paying such a huge amount and initially you are paying a low amount? One reason is also the difference in the repayment period. So in conventional mortgage loan which you take, your repayment period will be somewhere around 20 to 30 years. And generally, whatever loan amount you take for purchasing of real estate properties is quite a huge amount. So it is generally spread over a longer period of time, which we see it is about 20 to 30 years. But here, when the borrower is taking balloon loan, it would be spread in a shorter period of time. So it would be ranging somewhere between 5 to 10 years. And in this shorter period only, your loan amount will be cleared. So what will happen? Initially, you are making smaller payments and your time period is also shorter. So as a result, the end payment at the end installment or the end period, what we say, the last installment which you would pay would be a lump sum amount, and thus that is what we refer as balloon payment. So the thing you need to consider is that in balloon mortgage loan, the repayment period is quite shorter as compared to conventional mortgage loan. Let's talk about EMI. The monthly payments generally include interest only but may include partial principal payment also. So as I already mentioned that it depends on your terms and conditions of the loan, how you want to take it. So it depends on the borrower. If you are convenient only paying the interest at all the initial payments, and at last you will be paying the whole lump sum amount whatever is left, or you can also pay some amount of principal along with the interest. So you can talk to your lender about this, and you need to keep in mind if you are paying only the interest amount as the initial monthly payment, so what happened, your balloon payment will again be quite a larger amount. So you can try to include some amount of principal also if it is convenient for you to pay within those term periods, and then because it would make your balloon payment a little lesser as compared to interest payment. Now let's see interest rate. The interest rate offered in balloon mortgage is relatively lower than conventional mortgage loans, which makes it a cheaper option. So you can see that some people may find it convenient to take balloon loan, other may not find it convenient because there are a lot of risk involved, which we will talk about. And before that, you can see the difference is also in the interest rate. So interest rate is what is alluring to the borrowers. So what borrowers consider is that the lower interest rate, and since balloon mortgage loans, they provide a lower interest rate, it becomes a cheaper option for the borrowers. So let me give you an example. Like if you're going to take a home loan, which is a conventional loan for 20 to 30 years, you will find it somewhere in the interest rate of 8.75%, let's assume, for any bank. And if you are taking the same loan as balloon mortgage, so you can have a difference of you can get the balloon loan at 8% or 8.10, 8.15, somewhere like this. So you can get a difference of 0.50%, somewhere ranging between 0.50% to 0.80%. So this would be the difference in the interest rate, which makes it a cheaper option. But again, I talked about the pros and cons of the balloon mortgage, which we will discuss whether you should consider going for it or not. So let's move on to our next slide, which is options at the end of loan term. So what all options you can consider at the end of loan term? Now, loan term of balloon mortgage loan is important because at end you are going to make the large amount payments. So we need to consider this. Now let's see. In balloon mortgages, the monthly payments are not adequate to satisfy the full loan amount. So why is it? Because the monthly payments are quite lower. As I already mentioned, it would be only the interest payment or a very minimal amount of principal payment also. So it would be quite low amount, and that too in shorter repayment period. So the borrower will be required to refinance or pay off the loan or sell the home at the end of the term. So as a borrower, you will be having 3 options available with you, which you can consider at your last payment, at your balloon payment. So first is paying off the loan. Now you may decide to pay off the loan, which is your last, which is your all the initial monthly payments and your last balloon payment. So you should consider this option only if you believe that your income is going to rise significantly over coming years. So if you're thinking of taking a balloon loan and you think that you will be paying off the loan along with the balloon payment, so make sure that your income is going to rise in the coming years. You may not doubt on it. If you are having full assurance that you are going to get higher promotions, your income is going to increase, somewhere you are going to get cash flows from your business and all, then you can decide to pay off the loan, because the balloon payment, as I already mentioned, will be a large amount since there is shorter repayment period and lower interest rate. So you need to consider that. Second, you can also see this option of refinancing your loan. Now, refinancing is like you are making initial payments. You thought that you would be able to make the balloon payment. You will be having that much of money. But because of due to uncertainties, your financial situation was not so well at that point of time. So you thought of refinancing the loan. So lender provides you the option of refinancing your loan. Now, refinancing loan comes with certain risk which you need to consider. So refinancing could be a bad option because just assume that if interest rate would increase at the future period of time, because somewhere if you have taken the balloon loan for 5 to 7 years ranging between, so at the end of 7 years, the last monthly installment would be your balloon payment installment. So maybe till then the interest rate has increased and now you want to refinance the option. So again, the lender will be rescheduling your EMIs to make it more convenient for you to avail the option of making EMI payments. So at that time, your interest would also increase, which will make it more costlier. The EMIs will get more costlier for you. So refinancing is having its own risk, and there can be other risk like your income may drop. There could be uncertainty in economical situation. You may go through your job loss. There could be financial problems related to you. So at that point of time, how you would be able to make the balloon payment, or how you would be able to refinance the loan because the interest rate may have increased, the economic situation is not good. So this is all the risk that you should consider. So it is advised that only if you would be in a stable position in future and you are sure about it, then only you can decide to take the balloon loan as an option, because initially you will be making lower payments, and at that time if you would be able to manage somewhere from your properties, your cash flows to make the balloon payment, so it can be a good option for you. Otherwise, you need to consider all the risk which can be in the future, like the interest rate increase, your job loss, the economical situation, the uncertainties. You need to consider all those things. Now, third option is selling the house. If again you think that you are not able to make the balloon payment, you would not be able to pay off your loan, and you don't want to refinance your loan, you don't want to restructure it to again continue it making EMI payments over months, so you can decide to sell the house. Now, selling of house you should do before your balloon payment time period comes in. So before that, if you are able to sell your house and generate some cash flows, you will be able to make the balloon payment. But again, there is a risk of property values. Generally, we see that property value will increase, but many a times you can also see depreciation in the property value. So if the property value has increased, it will be in your favor. You will be able to sell the house, you will be able to generate money and make the balloon payment. But if it is decreased, maybe you would be getting lower amount than what is left to be repaid through in your loan. So you need to consider all the pros and cons before going for balloon mortgage loan. Now let's understand this with an example, how it happens. So balloon mortgage loan, let's see, if you have taken a loan amount of $50,000 and your loan repayment period is 7 years, so which is about 12 into 7, 84 months. Now maybe you have got this on interest rate of 8%, which is interest rate of 8%, and this together, your loan amount, your loan repayment period and your interest rate will define your monthly payment, and your monthly payment will be $367 approx. And you can see here I have written 83 payments. So you can see that for 7 years, you would be total making 84 payments, which would be spread across 84 months. So 83 payments, you will be making lower initial payments, which we say, which would be your interest or some portion of principal accumulated with it. So it will come around $367. And your last balloon payment, which would be your 84th or one lump sum payment, would be around $46,606. So this is how this whole scenario would work. You would be making this much of monthly payment, which is quite a lower amount, but at last your balloon payment will be quite high. So you need to consider this. Now here we are talking about loan repayment period of 7 years. Now if you want to see the same case in conventional mortgage loan, you can see that if we have taken $50,000 loan and the loan repayment period in conventional mortgage loan would not be shorter, so it would be somewhere around 30 years. Let's assume, so 30 years would be around 360 months, and your EMI will again be $367, which is equal to balloon loan. But what you need to consider that here you will be making $367 monthly payments for 360 months, that is 30 years. But here you are making $367 monthly payment, which is EMI, for only 83 payments, that is 83 months. So you can see the difference here. It is only 7 years. Here you are going through 30 years spread around. But again, the balloon payment, since you are getting shorter repayment period, you would have to make a large lump sum payment. So you can either go for balloon mortgage loan or conventional mortgage loan, depends on your financial situation, your future predictability, the economic situation, and your choice. So how you would be able to handle it. Now again a suggestion. So for those borrowers who have already taken balloon loan and are now stuck with their end balloon payment and they think they won't be able to arrange for that, so it would be better that you don't default on your payment. You would rather meet your lender and ask them if they could figure out some solution for that. You can try refinancing your loan. That would be the best option if you don't want to sell your house. So you can try restructuring and refinancing your loan. Again, you can spread it across months and you can make the payment. So it's better to talk to your lender. There are options available. You can go for it. Thank you for watching. I hope this video was useful. Do like and share my videos. Subscribe to my channel, DevTech Finance. Thank you all.